been another eventful month in politics on both sides of the Atlantic. Here in the UK, the Supreme Court ruled that Boris Johnson's decision to suspend Parliament was unlawful. And over in the US, Donald Trump has been facing threats of impeachment. Despite this, global equity markets have had a stable month after their wobble in August, with the MSCI World Index putting on over 2%. One company which hasn't had such a stable month is, of course, Thomas Cook. Since the start of the year, the group's share price had fallen by nearly 90%, until last week when it finally went into liquidation and it was delisted from the London Stock Exchange. The US Federal Reserve has cut its benchmark interest rate twice in the last 3 months. At the start of the year, the rate was at an 11-year high of 2.5%. It's now fallen back to 2%. These two cuts in quick succession are indicative of a slowing economy. By lowering the rates, the Fed are making it cheaper to borrow money, which in turn motivates consumers to spend and businesses to invest, both of which help to spur on the economy. Most major indices performed well in September. The FTSE 100 index gained nearly 3%, while in the US the S&P 500 index rose 1.9%, and European stocks, measured by the Euro Stoxx 50 index, rose 4.3%. It's also been a good month for the pound, which has appreciated against the dollar, the euro, and the yen. But it was a less fortunate month for gold, which has lost around 3.5%. We're approaching yet another Brexit deadline. By this time next month, in theory, the UK will be out of the EU. But we've been here before, of course, and I wouldn't want to predict what's going to happen in the next few weeks. In the funds, our equity exposure remains very diversified, and we're maintaining a low duration or interest rate risk. So the funds are defensively positioned in the event of most major shocks.